Hi guys, Saida here. What we're going to take a look at is a couple of multiple choice questions just to warm up a little bit, and then we're going to do a question about how different transactions impact the accounting equation. I've noticed students make quite a lot of mistakes in that question, so we'll tackle that. Here, if you're wondering where I got these questions from, they are from the book Intermediate Accounting, 17th edition by Keiso, Weygandt, Warfield. It's a book that none of the accounting students can ever get away from. You use it for your undergrad, uh, and whatever's part of it will also impact your CPA studies. All right, let's look at the first question. By the way, what I did mention was this question is taken from the study guide, the online resources which are available to everyone. You can easily go to YD's website and download these resources for this specific book. They have the Excel template, the Excel workbooks, the study guide, the PowerPoints. Very useful tool. So let's look at the first multiple choice question. It says the accounting equation. You're an accounting student. The moment it says the accounting equation, you should know what it is. It says in the bracket A equals L plus SE. What is that? That's assets equal liabilities plus stockholders' equity. Another way that this equation, you might see it a lot, it's written this way. Assets minus liability equals stockholders' equity. You should know the different ways that this equation can be written and still be correct. And all that entails is basic algebra, which again I've noticed that some students are very weak at. So make sure you're comfortable with moving things around the equation from one side to the other. And if on one side something is positive, you take it to the other side, it becomes negative, and so on. Let's look at this question. The accounting equation must remain in balance. A throughout each step in the accounting cycle. That sounds logical, sounds sane. Let's look at B. Only when journal entries are recorded. Now the word that bothers me over here is only. If you remove only, that leaves us with when journal entries are recorded. And it's true. The accounting equation must remain in balance when journal entries are recorded. But the only word bothers me. Let's look at C. It says only at the time the trial balance is prepared. Again, the word only. It is true that if we did not record things properly and we didn't make sure that the accounting equation would stay in balance, then our trial balance would not balance. What is a trial balance? It is a list of your T account balances in a form of table. And what it shows is if your total debits equal your total credits. It's sort of a check before we go ahead and prepare those financial statements. And if they balance, that means our accounting equation is fine. Our double entries are fine, and so on. Again, the word only bothers me because we need them for journal entries. We need them now for trial balance. And then D says only when formal financial statements are prepared. That's a weird one. We have 4 financial statements. The income statement, the statement of retained earnings, the balance sheet, and the statement of cash flows. The income statement has nothing to do with being balanced. The statement of retained earnings has nothing to do with that too. Balance sheet, on the other hand, the name says that it has to be balanced, that this specific balance sheet, or it's also known as statement of financial position, this is basically a representation of this accounting equation. And this statement needs to be balanced. And the last thing, we've got statement of cash flows. It does balance right at the end when we talk about the cash balance, but then that's an indirect way of going about it. So I don't want to confuse you with that. It doesn't, I would say, apply to all financial statements, although the income statement goes into retained earnings and the statement of return earnings goes into balance sheet, so they are connected. Hence, the answer is A, that it needs to stay in balance. What needs to stay in balance? The accounting equation must remain in balance throughout each step, not just when the entries are recorded, not just when the trial balance is prepared, and not just for the financial statements. So the answer for A is, the answer for 1 is A. Let's take a look at number 2. Which of the following is correct regarding double entry accounting? What is double entry accounting? That every entry or transaction will have a dual effect. And that dual effect is recorded as a debit and a credit. And that whatever debit or debits we have, or whatever credit or credits we have, they equal each other. That is what the double entry accounting system is. And that's it. It doesn't specify that you can have a specific number of entries in one entry or something like that. Let's look at E. A. Each transaction was recorded twice. Okay, that's odd, but okay, let's read that. Once in the general journal and once in a specialized journal. Each transaction is recorded in the general journal. It has to be. But there are some transactions which are recorded in the general journal as well as a specialized journal. That would be your receivables, for example. You put your total receivables in your general journal, but you need to know individual receivables. Who were your individual credit customers and how much they owe you? So A doesn't apply over here. B, each transaction must involve 2 entries. So far, so good. Either 2 debits. What's it's saying over here is that our entry has 2 debits? No. Our entry has 2 credits? No. Or 1 debit and 1 credit, which works. So B doesn't work. C, each transaction must result in equal amounts of debits and credits. Yes, that is the correct answer. D, each transaction appears in at least 2 of the financial statements. That is just so weird that you shouldn't even be reading this and wasting your time. And so the answer is C, that each transaction must result in equal amounts of debits and credits.